Good afternoon, everyone. My name is Evan Bradley. I'm the Chief Financial Officer for Campbell Property Management and one of the 5 owners of the company. I am a licensed CAM as well, and I work very closely with some of our largest clients on the major issues facing their associations, including budgets, reserves, insurance increases, loans, etc. For those of you not as familiar with Campbell, we've been in business since 1953 and manage over 400 HOA and condominium association clients from Dade to St. Lucie counties here in South Florida. With me today is our guest, Damian McFadden. He is a Senior VP of Commercial Lines Insurance for USI Insurance. He has been in this industry for longer than I have, placing association insurance, and really understands it in great detail. So he's going to help us understand what's going on today. Damian, are you there?
Yes, thank you very much, Evan, for the nice introduction. I appreciate it.
Care to introduce yourself a little bit for the group?
Absolutely. So my name is Damian McFadden. I've been down here now since 1998, and I started in 1995. Been doing this will be my 27th year. Definitely been in the trenches a very long time, and I appreciate having me. I work with Campbell. I have a lot of respect for the Campbell operation. I've been working with a good 20 plus years as well. So I thank you for having me. I don't do a lot of these, so thank you for having me on.
We'll coach you through it. It's not too bad.
Okay.
So just a reminder, this is for informational purposes only. This is not legal or financial advice. If you have specific questions about your community, please do reach out to your association's agent, management company, legal counsel, etc. We do encourage you to take advantage of the Q&A. We're going to have to limit it to questions about the course material. Again, questions about your individual specific situation are going to be beyond the scope of this presentation, and we really cannot get into that. So that being said, let's go ahead and get into the agenda here. So we're going to talk a little bit about the state of the current market. We're going to cover some of the basics of association insurance. It is sort of a weird vendor relationship, so we'll help you through that. We'll talk about what to expect going into 2022 and beyond, some things that you may be able to do to reduce your rates, and how to communicate and plan for these increases. We expect that to take about 45 minutes or so, and then we should have some time to get through some questions at the end. Again, use the Q&A feature that's part of Zoom to type your questions. So getting into the state of the market, I think we all know that the prices are going up. We experienced 10 to 20% last year, and we're seeing 20 to 50% this year. So how did we get here, Damian? What's happened?
Yeah, so basically, I describe it as every 10 years we have a major hardening of the Florida market. We had it after Andrew, we had it after 04, 05, and now we have it after Irma. We had a good space of time between hurricane activity between 05 and 17, and the public adjusting world was definitely ready for wind to hit Florida. And the Irma claim totals we're hearing are 25 to 30 billion, and then you have Michael for another 10 to 12 billion. And right after Hurricane Irma, we didn't see much effect, but there's about an 18-month lag on claim totals, which is what happened after Wilma. And now, because of these totals, these insurance companies are definitely tightening and fleeing the state.
So what happened in Irma? How did Irma get driven up so high to this 20 to 30 billion range? Didn't seem that bad.
Right, and that's what caught everybody by surprise. There's something that I call the 25% roof rule. This happened after Hurricane Wilma as well, but with these roofs being 20 to 22 years old in a lot of these communities, when Hurricane Irma hit, definitely the pretense was maybe we have some Irma damage we need to look at. After that occurred, all you need is 25% per roof to trigger total replacement, which triggers the ordinance provision, which really ramps up these claims to a very high degree. And then after they go through wind-driven rain issues, then you have windows and doors issues. So these claims, the average claim from Hurricane Wilma, I believe, was 3 million per association. Irma's probably double that.
Wow. So I guess that kind of lends to the next question. Why are the increases so large over the last couple of years, and why have we seen these kind of back-to-back stacked up on each other like this?
I think the biggest game changer that I've seen in my perspective is the public adjusters and claims attorneys working in tandem with structural engineers to handle these Irma claims. There was such demand in the claim world because the wind didn't hit for 12 years. So they were just ready at the trough to make these cases for associations, which they have every right to do. But this level of legal activity and public adjusting on these claims, the insurance companies were not ready to defend. And that's what's happening right now.
Gotcha. So another incident that occurred, obviously the horrible Surfside tragedy. A lot of people were curious, has that impacted the insurance market and in what way?
The Surfside situation was more the icing on the cake, sort of speak. It's definitely reduced capacity on the high-rise oceanfront older buildings. That market is fleeing. The main carrier that wrote that check for that claim, Great American, left the state immediately after writing that check. He was in Florida for many, many years. It's definitely spooked the reinsurers that back these insurance companies, and you're definitely seeing a dwindling of options out there because of it on the oceanfront space.
Right. Another thing we've heard about recently are roofs. It seems as though insurers don't believe that a roof has a 20 or 25-year life or warranty anymore. We're hearing maybe as short as 10, 15 in some cases. What are you hearing about roof life in terms of insurance?
Yeah, that was all brought by the public adjusting world making these cases on these 20-year-old roofs. So if the insurance company can limit that time, that helps their case to defend on any wind loss. So that was all not because of roof longevity. That was because the insurance companies want to get their arms around inspections and mitigating the chance that you could receive 100% payouts on roof claims going forward.
Gotcha. Gotcha. And are you seeing other lines besides property being impacted? Liability, umbrella, D&O coverage, the other insurances these associations are carrying.
Right, and these other policies, I call it your casualty policies. We've never been in a situation in my 27 years, not to like the 1980s from older producers that have done this. South Florida is the most litigious counties in the country. Florida has like, I believe, 75% of the lawsuits in the United States. So it's all the slip and fall lawsuits have in the water subrogation claims, the slip and falls, and nonstop legal activity against the association and boards are definitely having these insurance companies review their whole book of business, get off a majority of it. They want claim-free accounts, which is then in turn raising rates and limiting options in South Florida. Palm Beach is better than Broward and Dade, but they're all very difficult to place.
Sure, sure. I'll pause for 1 second. We did have a question. Someone asked, what is your role in the insurance industry? Do you want to describe a little bit about what it is that you actually do?
So I'm a broker. So we're a middleman. But we work for the insureds, meaning the associations, placing the risk in the marketplace. So we act as the middleman. I'm not an underwriter. I don't work for an insurance company. We're strictly a brokerage firm from USI, which is definitely the top two brokers that do this.
Great. So that kind of carries us into the next category, which is some of the basics of association insurance. I think a lot of people don't understand how this vendor relationship works. So let's start off with just basically what insurances must the association carry? And a few people ask, can they be self-insured because of these rate increases?
Yeah, so you have different governance of associations. You have the condo statute 718 we've all heard about. We have your bylaws, which the statute trumps your bylaws. And then we have banks, lenders that obviously affect refi and closings that all look at the certificates and insurance policy forms. That said, basically you need a property policy, you need a liability policy, you need a fidelity bond, and a directors and officers policy. Those four are your staples. The rest get into the business decision aspect. And then you have flood insurance, which we could talk about. In terms of self-insuring, that was talked about after Hurricane Wilma. It was attempted. There is some language in the statute that allows it, but you have to group like 10 associations, do corporate filings, post a letter of credit. It's just not feasible out there. So you'll never see. And then after a couple years after that, the bank said we will not accept self-insured programs or master policies. So the Fannie Mae really put an end to that discussion.
Gotcha. I think we covered this already based on that question, but kind of just briefly again, what is your role as the insurance agent?
Yeah, so this is a residual business. We work with whatever the board is at that time. Obviously, we hope to have a great relationship and have the account for a long period of time. Every year we place the account. That process starts 4 months before every account renews. We at USI have every market in the marketplace, which is important for you to know.
Okay. So when your associations are up for renewal and they need to get their policies replaced, how do you shop or bid out that insurance and make sure they're getting the best deal?
Yeah, so insurance companies have a rule when you can actually submit the application, which is typically 100 to 120 days before it renews, based on the expiration date, which varies for each association throughout the year. We have kind of an assembly line production, and that occurs right by midnight where they allow the application to be accepted. So then in turn, that sits in the underwriter's desk, so to speak. They then want backup material like appraisals, mitigation reports, loss history. That process goes on for 90 days, and they start releasing or rejecting the account about 20 to 30 days before each policy renews.
Gotcha. So we have admitted and non-admitted carriers in Florida. And that term gets thrown around a lot in board meetings and presentations on insurance. Could you help the board members in attendance understand what that actually means?
So admitted means the insurance company files their rates in the state of Florida. They're regulated by the Office of Insurance Regulation and the Department of Insurance, Department of Financial Services as well. They're subject to bad faith protection, which is typically triple damages in Florida. And you have a right to appraisal in the policy form to mediate any claim. That's important because non-admitted companies, you do not typically have that provision, or you have to make sure you do. So usually non-admitted cases, especially hurricane claims, go on longer than admitted cases. You obviously have the backstop of the state, which is 200 grand per unit. So if the insurance company goes insolvent, and most of these admitted companies in Florida are not rated by AM Best. The state wanted to encourage companies to come in years ago, and it only took $5 million to be an insurance company after Hurricane Wilma. They bumped it to 20 million, I believe, because they do not want to be inundated with policies meeting citizens. So they want to create a market. That market now is fleeing, but most of those companies are admitted, so they have the backstop of the state, which is 200 grand per unit based on the amount unrecoverable.
Okay. And then what's the non-admitted carriers? How does
The
that work?
non-admitted, you do not have any of those protections. They choose not to file the rates in the state. They're not backed by the guarantee fund, which is also known as FIGA. I just connoted. They're not subject to bad faith protection. You have to go to federal court versus state court on any claim. You lose the home field advantage for sure.
Right.
So you definitely would prefer an admitted, highly A-rated company, but the non-admitted companies are active out there. Some are very highly A-rated that we would recommend as well.
Gotcha. Okay. So this is an interesting graph. We kind of charted the premiums of an example condo from 2005 to 2021. For those of you that weren't living here then, 05 was when Wilma hit, which was a Category 3 storm that really dramatically affected South Florida. And then we really had quite a lull in terms of hurricane activity until I believe it was 17 with Irma. So kind of take us through what's happened with the market here a little bit.
Yeah, this mirrors my initial comment about every 10 years you get these spikes. So after Wilma, rates pretty much doubled, if not tripled in some cases. And then after that, the state created this mitigation form that talks about roofs and glass, et cetera, which then mitigated premiums. At that time, remember, Governor Christ was governor. And then we had a 3-year rate freeze with Citizens. At that particular time between 06 and 010 was very Citizens dominant. They had over a million policies again at that count. And then after Lehman Brothers collapsed, I think in 2010, all the market got in chasing yield for returns, but we still had a spike in 14. And then obviously now we're here in 17. These graphs are it's pretty interesting when you show boards what they paid over the last 15, 20 years. I will tell you the mean is about 50 cents on the dollar for the last 20, 30 years. So if you had a $10 million village, or a building, it'd be 50 grand premium. Typically that would be the average.
Right. And we actually kind of figured out what the increase was year over year going from 05 to 21. And it's only been a 4.9% annual inflation rate, obviously higher than real inflation, but not as high as some people might think. It's actually been a fairly reasonable increase from 05 to 21, but it's obviously kind of lumpy. And if you bought later, it hurts more than if you bought earlier. So
100%. And there's sometimes there weren't the same boards at the time. So you want to give them that full perspective for sure.
Right. So what should board members and managers expect going into 2022? What's happening in the market, and what should they plan for in terms of increases and renewals?
Right. So this is obviously everybody's trying to get their arms around the insurance budget, the insurance line item. I will tell you, every association for the last 40 years, insurance has been 20 to 30% of every operating budget. hopefully in those low years, it was 20 to 22%. Now we're trending 25 to 28% per operating budget for the insurance line item. Then you have the real estate activity, which is off the charts down here, which is affecting these insurance appraisals from a cost per square foot standpoint. So appraisals are done every 3 years per statute. So those appraisals are probably going up 10% right now. In some cases more. Surfside was only insured for 30 million. They were grossly underinsured. I'm sure that appraisal is being questioned as we speak, but cost per square foot is definitely rising that you need to be conscious of. And a lot of boards are looking at that valuation. We keep on top of that for our insureds and go over that ramification. Obviously more valuation, more premium, right? So in terms of re-underwriting, these inspections and going down, basically really drilling down, these underwriters are really drilling down on what they want to accept and what they do not want to accept. So our job is obviously push the needle to make them accept the best we can, but there's definitely more stringent underwriting, especially loss analysis. And still a lot of associations have open IRMA claims that they're trying to settle, which affects their placement, okay? And in terms of deductibles, most boards we're at 2% at Hurricane Irma or 3%. They wanted 2 after Irma. We definitely pushed that for recovery. And now some associations are forced to take a 5% deductible. I do not like the 5% deductible because it basically, you start self-insuring the roofs in essence for those high deductible figures per building. Every board we're telling to budget 20 to 25% on the insurance line item, especially for the property coverage. The liability is a moving target. And then in terms of counts that are being declined, roof issues, certain insurance companies want those roofs 10 to 12 years old, and you have to prove that, through permits, etc. So there's definitely a lot of scrutiny on every submission, which is taking a lot of times for every brokerage staff to get acceptance.
Gotcha. All right. Well, that begs the question, how can we reduce rates? Are there things boards can do to try to save money in that line item in their budget? Can they make building improvements?
Right. Great point. So up and down A1A, there's a race to get the impact glass completed 100% on all the units in common area. And there was a lot of buildings with a straggler amount of units left, 10, 20, 30% that did not get the impact glass completed or done. There's a race to get that done to get something called a Class A building status, which means the envelope of the structure is Miami-Dade code compliant, windows, doors, and sliders. So there's an arms race, so to speak, to get that accomplished, which makes you eligible for a higher tier product. So that's the oceanfront. Weston 95 or the village type model, you're definitely looking at roof ages and also plumbing concerns. There's a lot of water damage claims in the old cast iron pipes that boards are having to address. Insurance companies are pointing that out, and there's lining involved that they like to see. That begets that whole issue of water damage claims and mold, which managers love and boards. So that said, you're talking about roofs, West 95, plumbing, anywhere you could do it, and obviously getting this Class A and the impact glass on the ocean front.
We talked about this a little bit on the prior slide, but some people have asked, do we have to insure for the full replacement value? And I think the obvious answer is yes.
You do. Your bylaws require that. The condo statute basically does, and the lenders are all over this issue. So yes, you can't just pick a limit, carve it out, and do some sort of risk analysis and pick a limit. It doesn't exist.
Great. So when boards are presented with these different policy options, what do you think they should be looking at? Are there some things to look out for, exclusions, different things that can be slipped in there to try to alter the coverage or reduce the rates?
I think you got to be careful. First of all, I'm a big believer in carrier coverage price. The first thing the boards need to look at is the carrier. Is this carrier admitted? Is it not admitted? What's their track record? How long they've been in Florida? What's their claims paying abilities? What's their policy form look like? And all the brokers, I'm sure, do a pretty good job that do that. And then obviously the coverages, you have to look at building ordinance coverage. You have to look at to make sure you have full replacement costs on the policy and not actual cash value with older roofs. This is the broker's job really to drill down that and sit down with you to make sure you aware of those pitfalls, because the broker is also liable here for this policy form that's sold.
And then I think we talked, are there actual changes in the policy other than increasing the deductible that you can make to try to reduce the rates?
No, I mean, boards are playing with all the premiums in that hurricane deductible, Evan. So a lot of the boards are saying, can we max that out to the 5%? We go through that diatribe. Does that really make sense if we get hit again? And really what shocked the market is we've had Cat 4 and Cat 5 hurricanes 4 years in a row. So the insurance companies can't take a breather. And again, the PAs and attorneys are ready on each one, swarming through all these coastal states. And they're actually still in Puerto Rico with Marie. So there's not much you can do right now in terms of that, but deductibles obviously is a big one, and building ordinance coverage is a lot of the premiums based in that ordinance provision.
Gotcha. All right. So inevitably, we're going to have increases. We can try to mitigate it some, but there's no magic bullet here. So how do we communicate this to our residents? In our experience from the management side, you got to do this early and often. People like transparency. They like things they can plan for. If you put out a newsletter, if you put out a memo from the board, put this in there that yes, insurance doesn't renew until maybe it's January, maybe it's March, maybe it's June of next year. But these increases are coming. Help your people plan for it, save for it. Don't just shock them when the budget comes out. And the more you talk about this, the more they'll understand, they'll ask questions, and they'll come to terms with it. Have professionals deliver the message. You don't always have to be the bearer of bad news as the board or management. Agents will come to these meetings. They will explain what's happening in the market. They will explain, people want to ask about the different opportunities for savings or what they perceive those to be. And the agents can explain why those are good or bad ideas. You do not have to become the insurance expert to explain why it's going up. Let your professionals do that for you. And at the end of the day, we need to put this in perspective a little bit. Condo property insurance is a great deal. We have an example waterfront condo that we manage, has 1,100 units and a total policy for all their policies. That's property, casualty, liability, D&O, umbrella, everything they have is about 1.7 million. Obviously, the large majority of that being property. That's an average cost of only $1,546 per unit. And it went up 30%. I think it was 1.4 or something last year. But still, it's $1,546 per unit for all of your property coverage except for your personal contents. Any single family waterfront home is going to be paying anywhere from $6,000 to $12,000 plus to have that same amount of insurance coverage. So you're 1/5, 1/6 of what a single family home would pay at the low end, maybe 1/10 at the high end. So to live on the water in South Florida, everyone is still getting a very good deal in terms of insurance. Yes, it's going up, but it's a lot better than the alternative. So anything else you want to say here, Damian?
No, I love that point you made, because I do this analysis all the time per head, discussing it. Obviously, boards are upset, increase, when it goes back to back to back, obviously that's when it gets difficult to budget for. I didn't do a great job, self-admittedly, last year. I was telling boards best case 10, worst case 20%, and it definitely was on the higher end. So this year I'm doing a better job of explaining it could be another 20 to 25%, or it will be. So there's no shock to the system, so to say. So transparency, huge, and communication. So I totally agree with you.
Great. All right. Well, we finished a little bit earlier than I expected, but that's okay. That'll give us some time to get into the Q&A here. So I'll kind of go through and try to moderate these and see if you can help us a little bit. The first question is one I've heard. I'm sure you've heard it too. Can we buy our insurance direct and save on the broker commission?
Yeah, and brokerage commissions are typically 10 to 12%, depending on the insurance company, et cetera. I obviously get this all the time. You cannot. These insurance companies do not do direct. Maybe one day Citizens will if they're the only game in town. Brokers are concerned about that. I'm not going to lie on that issue. But right now, you definitely have to go through a conduit, meaning a middleman, a broker.
And you can imagine as board members, if all board members could reach out to insurers directly, they certainly don't have the customer service capacity to deal with that. There's a reason they need to work with professional brokers. They can only handle so many requests and that sort of thing.
Absolutely.
Jeff asks, could you repeat the 4 basic types of insurance that all associations should carry?
Okay. Your property insurance, or also known as your hazard in the banking world, your liability coverage, which is basically your slip and fall coverage. Then you have a fidelity bond, which covers your funds for any theft, computer fraud, etc. third-party forgeries, and then you have a directors and officers policy protecting the board and committee members. So those four are your tenets on any bylaws or mandate that you need to carry.
And some of those are required by stat. I think they're all actually required by statute as well.
Correct. Correct.
What happens if a condo does not have wind insurance and it's damaged? Condos you have to carry wind insurance. It's required by statute and documents. So to answer that question, you have to carry these insurances.
100%. Co-ops are interesting because some co-ops definitely are starting to make this decision. They have the latitude to do that. So it's interesting. Some are doing that, if you can believe it.
I guess so. The follow up to that would be: are there options for the owners who say, "Well, I want wind coverage because I own my unit here," or can they get it on their own or no?
No, it's the H06 or the condominium unit owner policy is only the paint in; it won't cover the shell, so it will help you in that regard.
Gotcha. Someone's asking: is there a list of admitted and not admitted carriers in Florida? They could not find anything on the Florida insurance website.
Good question. That's the first thing I was going to say. Look at call the Department of Insurance. Obviously, I would rely on the broker first to give you a list. I will tell you it's a handful. We're talking on one hand, basically, maybe two. The homeowners world also is completely different than the association world. So you have many more admitted options on the homeowner side than you do on the commercial side. But I would start with your broker and go from there.
I think this question is going to be a little bit beyond our scope. Someone asks, what if the master policy doesn't cover full replacement costs to rebuild? What should the board do? Why are insurers not offering unit owners? I don't quite understand the other piece of this, but basically if you feel like your building is undervalued in terms of what it would cost to replace, what should you do, I guess is the question.
Yeah, it's an excellent question per se, because obviously because the Surfside boards are thinking of, I've had some total losses on the West Coast with hurricanes as well, but there's also something known as loss assessment coverage. So which deals when the association's owners get assessed because coverage is maxed out and or hurricane deductible. There is some degrees of coverage on your interior policy because you will be assessed, obviously. Granted, it's not a big chunk of change. It's usually $2,000 per policy on the interior. But every time there's a hurricane, I go to a ton of loss assessment meetings because a lot of the new boards don't understand that they're going to have a hurricane assessment, let's say for $250,000 or $500,000. It's divvied up to the owners involved. They could take that assessment letter, give it to their interior carrier. They will get a $2,000 check, and usually the deductible does not apply. It's a thought.
Okay. Someone's saying in Miami-Dade, we're having a lot of trouble placing coverage. Our only option is Citizens. Premiums are extremely high. Are there any alternatives? I mean, I don't, doesn't sound like it, but are you aware of any alternatives?
You will find most associations aren't placing Citizens. Usually you will find a Lloyds of London layered program that will give you an offer besides Citizens. The thing you got to really worry about Citizens right now is they learned their lesson after 2004, 2005. They used to have something called an increased cost of compliance provision, which was their version of building ordinance coverage. They do not provide that anymore. There is no code upgrade on that policy to deal with any roof claims that involve that 25% rule. So you have to prove that the entire roof was damaged. It's not easy to hit that burden then. So they're limiting their exposure greatly. And also when you enter Citizens now, they want a full roofing report and a full electrical report. And a lot of these buildings have these old FP panels and they're not going to get acceptance. So it's not a duck walk to walk into Citizens anymore. And the rates are about $1.10 right now. So I would urge you to find a broker to get you a Lloyd's option.
Gotcha. Someone asks if we do upgrade all the windows to impact and sliders, et cetera, what kind of reductions might we see in our policy premiums?
Well, on the ocean front, I will tell you the two major markets that do those that are Class A are usually 60 or 70 cents on the dollar. The other markets are $1 to $1.10 if you're not. So there's like a 30 to 40% swing between a Class A structure and a non-Class A structure, to give you perspective.
Right. So extremely substantial. We've even seen some buildings where if you really do the math, it's actually worth it to just assess and redo the windows and sliders, and you'll make it back over some reasonable period of time. So especially 100%. With premiums going up.
100%.
Someone asks, kind of what is the range of bids you might see from different carriers? It's kind of a hard question to answer, but you were mentioning kind of rates on the dollar. When you get multiple carriers involved, what do you see as a range?
You're going to see anywhere, usually every association right now, we get these market summaries. And granted, we're getting these answers at the last minute, basically. The last 3 or 4 days, we'll get these Lloyds options because they're just inundated with submissions. But typically, you may get 2 to 3 bids, but that's it. That's the entire market in some cases for most. In that range, it's going to be about a 40% swing, and it's going to be very clear what the choice is going to be. That's an honest answer.
So one of my previous slides referenced EFIS construction. So someone kind of asked, what is EFIS construction and why is that so bad? And are you uninsurable if you have EFIS?
Yeah, there are some associations around here that that have EFIS construction, and we have one in West Delray that, just to give you perspective, they got hit from Hurricane Irma, a 4-unit quad up and down, hit the 51% rule. It takes 51% to be a total loss. The county tagged it. They had to bulldoze it. It then triggered the Florida building code on these 4 units. The 4 units were appraised for $410,000 to replace the shell, 1,000 square feet, just 4,000 square feet. It ended up costing over $900,000 to replace these 4 units. This is my claim, because they had to replace the EFIS with concrete, Miami-Dade coat impact glass, and they had to sprinkler both stories, if you can believe it. So yes, there is EFIS out there, and you cannot put it back when there's an event. You'd have to go concrete.
What is EFIS, just for those who
the way I describe EFIS, it's not concrete. It's also known as drivet. A lot of medical office buildings, the whole panhandle is that construction. The very famous case ever was the Tierra on Singer Island. That was EFIS. It was a $120 million citizens claim at the time. I describe it as not concrete.
Yeah, it's a building covering. For those that aren't, it's a building covering or exterior coating that's not a concrete coating. It just does not hold up nearly as well in a storm, obviously. So there's a very specific question here about flood insurance. I'm sorry, Jose, it's a little too specific for us today. You're going to need to ask your agent or your attorney about that one. Someone asks, is it safe to omit umbrella coverage to reduce costs? The short answer is no, but I'll let Damian get into it.
Right. I just want to go back to the flood for the second. So it's important for everybody to know on this call, the federal government did come out with a new rating software for flood insurance. It's called Risk Rating 2.0. Brokers are getting their arms around it right now. Basically, they're throwing all the old information in the garbage in terms of maps, feeling it wasn't equitable, I guess, nationwide, because they were always in the red on flood insurance. And a lot of associations are getting re-rated based on the new risk rating. They will, on renewals, it's after April of next year. So it's capped at 18% increase, but it actually could go down. We're seeing some go down, if you can believe it. So there could be some hope there on the flood insurance side. In terms of the umbrella, in terms of the question was to drop the umbrella, Evan, is that the question?
Yeah, can we drop umbrella? Is that a smart or safe move?
No, it's definitely not smart or safe. The bottom line is the umbrella goes over 3 policies. Just so it's not a property policy. It goes over the liability coverage, which has $1 million primary limit. It goes over the board's policy, which is $1 million, and it goes over incidental workers' comp exposure. So most cases in South Florida go over $1 million with legal involved. So I definitely would keep the umbrella coverage, or else you'd have to assess the membership if you lose a judgment.
Yeah, an umbrella, of all the policies you described, umbrella is the least expensive. You're going to save the least amount and expose yourself to quite a bit of risk. So
yeah, you don't want to be sitting on the board without it.
Right, and a lot of some of your contracts that your association has may require the association to carry umbrella as a condition of working with a certain vendor. So you may be in violation of certain contracts if you were to abandon that as well.
Great point.
I don't quite understand this question about single family roofs. I'm going to skip that. Broker commissions, not sure what that's about. Someone says our roofs are older than 15 years, but they're in great shape. What if no insurance company will insure us due to roof age? I don't think no one would insure them, but what could they do?
Well, keep in mind, the insurance company you have now has inspected you several times. You haven't been with the insurance company for just a year. I would strongly doubt that. So they will work with you as long as your loss record is good. They'll continue to renew you. Typically, if you get non-renewed, you get thrown in the deep end of the pool, it will come to light, and then you're looking at Lloyd's of London syndicates.
All right. Someone asked, are Citizens and Universal the only insurers east of A1A right now?
Well, Universal's a homeowners carrier. They do some incidental commercial with their American Platinum product, but no, there's several HO6 carriers on this is a homeowners market question, not a commercial question. You don't see Universal in association. So definitely call around individual agents. There'll definitely be more options than those two, I would think.
All right. Someone asked, you mentioned window and door replacement gets a reduction on the waterfront. Basically, how far west does that matter is the question.
It still matters, but you'd have to get all the units in that particular building to do it. And it's hard to do west to 95 or your guarded style product to achieve. It will help you on your interior policy. We will mention it to the underwriters that let's say there's 51 or 50% of the community has impact glass. But in my 27 years, you'll never see that out west of 95.
Susie says, our board eliminated workers' comp because the vendor should be insured, but what about volunteer residents doing work on behalf of the HOA? That's an excellent question. Damian, you want to talk about how workers' comp works for associations a little bit?
Yeah, and to digress for a second, if the association's built 2002 or newer, they may have impact glass already. So just keep that in mind. My comment there was before 2002 on the last question. This question in terms of volunteers, yes, there's on the workers' comp policies, when you have a management company like Campbell, they have the payroll, they have the workers' comp exposure, but the association still carries something called, if any, workers' comp. It's based on no payroll. It protects the association to make sure if certificates were gathered but lapsed in coverage or state exemption forms or small vendors do not have workers' comp, waivers could be signed. But that said, it also has a volunteer endorsement on the policy that would protect volunteers helping out, doing some landscaping, etc., or running a party per se if something happened. There is coverage there on that if any workers' comp policy, which is extremely cheap.
Yeah, we highly, highly recommend that you carry those policies. They run about $750, give or take. Extremely inexpensive, and there is definitely risk there. There are some less scrupulous vendors out there in South Florida that may pretend they have workers' comp, and they may not, and you can be liable for that in addition to the issues with the volunteers. So any hopes that the carriers that left the Florida market will come back? We can certainly hope, but the market will dictate that. Someone asked, can you explain the difference between HO3 and HO6 policies?
Yeah, just the last question in terms of coming back, in terms of the oceanfront, AIG and Everest did a ton of associations for us. They both pulled out in March, which created a huge vacuum. So I don't see them coming back anytime soon. Why? Just because they got hammered legally with these IRMA claims. They don't like getting sued, insurance companies, surprise, surprise. So the amount of volume of lawsuits, they just could not keep up with it. So I don't know if that's going to change anytime soon. In terms of what was the second question or the last question, Evan? I'm sorry.
HO3, what's the difference between HO3 and an HO6 policy?
So HO6 is a condominium unit owner policy. So if you live in a condominium association, you have to cover from the paint in. Okay, so your flooring, your paint, your cabinets, your appliances, your electrical fixtures, your contents. That's called an HO6 policy. An HO3 policy is basically defined as a single family home, separate defined structure. You will find garden style villages that are called HOAs that you can either buy an HO3 or an HO6. You just need to look at the limit of coverage because you're not going to insure through the roof line because there's a master property policy. So a lot of where it gets sticky is when you're an HOA but insured like a condo. Okay.
Gotcha. With someone asks, with so few insurance companies offering condo insurance, can one broker really save us money versus our current broker? Is the question.
It's a great question. You got to make sure your broker has all the markets. So let's just start there because there's several brokers that don't have some of the main markets, especially in the high-rise space. Okay, so that's number one. So if they have all the markets and you could validate that, then the answer to the question is very difficult for a broker to look like a hero right now compared to another broker. Very difficult.
Okay. What is the difference between a broker and an insurance agent?
An agent typically represents just one market, like a State Farm agent, a direct writer. So they have only a one-trick pony. A broker represents the entire market, which I just indicated. You want to make sure it has the entire market.
Gotcha. Let's see here. Someone asked about flood insurance. I think this is some misunderstanding. Someone thinks FEMA is pulling out. Is FEMA pulling out of the flood insurance market?
No, definitely not. There's no private flood market in Florida. The National Flood Insurance Program is overseen by FEMA, and condominium associations are written on an RC BEP, basically a condo form. And right now, there's re-rating going involved for next year in new business. So you'll see some different rating next year.
Gotcha. Do multi-year policies exist? Can you lock in premium rates for the next year, 2, 3?
Yeah, we did 2-year policies for many years, and Irma changed that as well for us. So we were doing 2-year policies on the ocean front. You don't see that typically west of 95 at all, but you'll see extended term policies, which I do have access to. I'm not here to do a pitch in any way, but I do have those policies will run 17 or 18 months max. The insurance companies do not want to go through 2 hurricane seasons on any policy form. So that said, but you'll start seeing some brokers will have extended policies. Yes.
Okay. Someone said, I heard there's an issue insuring flat roofs no matter what the age. Is that accurate?
No, they're definitely going to look at the age and roof maintenance contract. They will do some bird's eye views and look at it. These insurance companies are much more sophisticated. But no, you could definitely get them insured.
Gotcha. I think we covered this, but the person may have joined late. How do you know your broker is getting you the best price available?
I hate to say it, trust. You have to build a trust with your clientele for many years. Luckily, I've enjoyed that. Some people on this call I do thank for that trust, but you definitely have to show your worth, and you have to go with your gut a lot of times too. It's not a perfect science, but there's so much heat on insurance brokers. I'll be shocked that you're not getting their best, because there's obviously somebody always around the corner.
All right. Do you recommend third-party roof inspections annually to ensure warranties and basically show that the roof is in a properly maintained and insurable condition?
Absolutely. At least you have a log, because if you get dropped from your current insurance company, you'll have a log to show the new insurance company, and they'll ask those questions. And obviously, Palm Beach County doesn't have a 40-year, which definitely usually gets into concrete and electrical, but roofing sometimes I believe is part of that too, Evan. I'm not sure. But all these insurance companies are going to want detailed data, and I think the state's going to come out with a lot of different issues too in terms of inspections and what they expect buildings in the building. So yes, I would keep a log of anything you're doing capital improvement wise.
Gotcha. This is a kind of a newer insurance, and I am seeing associations pick this up. What is legal defense insurance, and do you have any thoughts on that?
Yeah, I'm a huge proponent of this policy. It was Mark Bogan was the main impetus behind this policy. He's very famous. He was in the Sun Sentinel for many years, if you recall, Broward County Commissioner. He was behind this policy called Atlantic Mutual Legal Gap Policy. He represented a lot of associations, and he saw the cases he was taking. He felt he could fill those gaps. A lot of it relates to mold liability claims, which you could not insure on a liability policy. And then it dovetailed into COVID claims after it was instituted. So it was purchased hot and heavy because boards were very concerned about pool opening, remember, et cetera, et cetera. So huge proponent of the policy. It covers all claim denials on a GL and D&O policy. So the board is constantly defended on any claim, whether it's a security issue, an intentional act. Water liability is the big one.
Yeah. And I'll second that. From the management side, I've been involved with a couple of associations, one that had it and needed it. And it could have been a big issue and made it basically no cost to the association. And the legal costs were going to be more than the cost of the lawsuit. But because they had legal defense, they were able to stand their ground, not settle, and came out ahead. And then another group wishes they had it. They ended up with 6 figures in legal bills due to a denial on something they thought was an insured loss on a D&O claim. And they were very sorry they hadn't paid the relatively minimal amount to have the coverage. So let's see. There's another. I'm not sure. Okay, that's a little too specific. Do you have thoughts on hydro coating that has a 10 or 15-year warranty versus an actual re-roof? I'm not familiar with hydro coating. Are you?
I believe that's the silicon that you hear about.
Okay.
all the time.
Yeah.
Insurance company doesn't typically, most insurance underwriters don't recognize the silicon coating at all.
Okay.
Obviously, it could serve a great purpose. A lot of boards are entertaining it, but the insurance world has not accepted it as yet. From the underwriters I've spoken to daily on the subject.
Gotcha. This is one we should have covered earlier in basics, and we didn't. I'm glad somebody asked. What is an agent of record? How does that work?
Okay, so this gets to the messy part of our world in my business for the last 20, hence my no hair, etc. The bottom line is when you get into a situation where, as I told you, 120 days out, the broker's going out to market, he's going to all the marketplaces, but some boards say, you know what, I still want to get another broker involved to go to the same insurance company. Sometimes they don't realize that until you explain it. An agent of record letter, or letter of authority, I call it, is needed to trump the other brokerage submission. They do not issue, these underwriters do not issue multiple quotes. So you have to have one voice. So either you discard the other voice and have a new voice, but you can't have two voices at the same time. But brokers will come in and say, listen, I need this letter. It does fire the other broker immediately to the same underwriter. The underwriters hate agent of record letters because now they got to start from scratch. A lot of times there's conversations that go on between brokers and underwriters based on long relationships of what they want to achieve on this particular account. So now they have to start over. So yes, it's definitely a tough fact about our business, but it's called an agent of record letter. You hear all the time in this bidding process, but I will tell you it's going to the same insurance company. Typically the other broker already sent it to.
Gotcha. Someone is basically asking who performs the appraisal or the valuation. How are those values determined?
Great question. So they're done by independent parties. There's about 4 main appraisers out there that do these all day, every day. Usually they're based on Marshall Swift, which is basically sticks and bricks profit and overhead per zip code, which are under a lot of scrutiny right now, as I indicated. So yes, they're done by third parties. To answer your question, I'll be happy to give you the names that do that.
So they're, just to clarify for this person, yeah, they're not performed by your broker or your insurance carrier. They are independent third party.
Not total conflict for that.
Right. And this person asks, how does an insurance claim affect your renewal costs, open claims?
Well, great question. Obviously, right now it's insurance companies want totally claim free, but just always remember frequency hurts you more than severity. If you have one act of God claim like Irma, it's not going to hurt you as opposed to 7 water damage claims last year. So if you get that frequency issue, you'll definitely not, the chances of getting a renewal quote or quote in general are going to be very difficult unless you come up with a game plan to stop the bleeding, so to speak. So frequency is always going to hurt you more than severity.
All right. Okay. Well, I think that takes us to the end. We got to most of the questions. About 10 minutes left, so we'll give everybody a little bit of extra time back into their day. We appreciate you all joining us. For those of you that may want to reach out to myself or Damian, whether you need professional management services or have concerns about your insurance policies, rate increases, or looking for an alternate broker who specializes in this area, our contact information is here. All of the slides today will be sent out to you as part of the course. So Ashley has everybody's email address as long as it was provided during registration. And yeah, if anyone needs any help, please reach out to us. Damian, any parting thoughts today?
I really appreciate your time. Again, I don't do a lot of these. I know some people are on this call that I do know, and I thank you for joining. I'm here to help anybody in any way in a non-pressure way. So feel free to reach out to me if you need help.
Great. Thank you, everybody. We look forward to seeing you on future webinars, and please answer our poll. Have a great afternoon. Thank you.
Thank you very much. Appreciate it.
Thanks,
Bye-bye.
Damian. Take care.
Bye-bye. Thanks, Evan.